Hello, everybody. Hello, traders. Welcome to the ActivTrades Monday Market Matters webinar for 9th of September 2024. Paul here, okay, and here to talk about trading trend lines. Okay, so what are we going to talk about today? Well, as always, we'll talk a little bit about the news as part of Monday Market Matters intro, but we're going to talk about trend lines, and really we want to talk about how can trend lines help us with our trading. How do we draw trend lines on charts, okay, to do it properly? And then, of course, how do we actually trade using trend lines? And how could we create a simple trend lines based trading plan, all right? And then with the time we have available afterwards, we'll have a little check-in on live markets and see how they open up after the eventful volatility of last week. Before we carry on, it would be interesting to know how many of you who are joining us here for the live session today, how many of you currently use trend lines in your own trading? And if you do, is it part of your analysis tool, or do you actually look to actively sort of trade using trend lines? It would be good to know. You can put your own thoughts or comments in the chat box. As always, I recognize that we have a global audience here, and we also have an experienced audience from people who are at the start of their journey to those who've traded for many years, and it's always great to get everybody else's input. And as always, you can do that or write questions into the chat box itself. For those of you who don't know me, my name's Paul. Traded for many years, traded for funds, traded for clients. Primarily my own trading tends to focus on FX, indices and commodities. I tend to be a trend trader for longer term swing and position trades, and I tend to be a reversal and a mean reversion trader for my shorter term intraday trading, all of which have relevance to today's topic about talking about trading trend lines. So Benjamin says, I use trend lines to trade and use the trading view alerts to be notified when broken. That's great. Thanks for that, Benjamin. Thank you for your input there. Martin says, I only use trend lines as an analysis tool. Fabulous. All right. Really appreciate your input there. Okay. I'm going to share a few different ways that people can understand trend lines and how they can utilize them. But it's great to hear, just even from a couple of the people here, how you actively use trend lines in your own analysis and trading. And as I said, if you've got questions or if you've got thoughts, by all means, you can put them into the chat box as we go through our session. So, of course, here we are, Monday Market Matters. It's ActivTrades regular webinar series, okay, every Monday, 2 o'clock London time, where we take a look at the news, okay, the news for the week ahead. Mostly a focus on education. So, of course, we're going to talk about trading trend lines today. And then we'll also always have a chat about the ActivTrades platforms and tools that you have access to as a client. And we finish off with a look at the live markets. Okay, so there's an awful lot of us to cover. We're always there to try and help you, give you a sort of insight as we look to start the first US session of the week in about 22, 23 minutes. So there's always plenty for us to cover, always plenty for us to discuss. So let's crack on, shall we? For those of you who join us on a regular basis, I always talk about if you're a new trader, I don't expect you to be able to analyze all the economic data that comes out for a week ahead, but it is unbelievably important to understand when that data is being released. And you can do that by utilizing an economic calendar. There is an economic calendar on the ActivTrades website, so I commend you to go and use it. And there are economic calendars available elsewhere on the internet, so there's no excuse not to actually have an understanding of the news that's coming out. As I said, I don't expect you to be able to analyze or maybe even understand it when you're at the start of your trading journey, but you need to know when it is, because that news can induce volatility, and that volatility, the volatility can be a double-edged sword. When you're on the right side of it, it's fabulous. When you're on the wrong side of it, it can make for a challenging session. So it's in your best interest to know what data is coming out. So we had a busy data week last week, which culminated in the American non-farm payrolls job numbers on Friday, first Friday of the month as always, against an estimate of about, I think it was 164,000. The numbers came in much lower, about 142,000. And so that added to let's say a bearish sentiment that had crept in during the week as the American data had come sort of out, and as kind of big players returned to their desk and started to position themselves. So we ended up with a rather bearish week, certainly for indices, and we will look at that in a moment when we look at the live markets. But we have to know, well, what's coming on this week. So today, today Mondays can be quite quiet days. Today is just really Chinese inflation rates for today. But when we look at the rest of the week, and in particular Tuesday, Wednesday, Thursday, what we have here for ourselves is that certainly in the UK, Tuesday morning, we have the UK unemployment rate tomorrow morning at 7 o'clock London time. And then on Wednesday morning, we have UK GDP numbers on at 7 o'clock on Wednesday morning. So, if you're a sterling trader like myself, that's something that you'll be keeping a particular eye on. But we also have other data. We've got, Australian confidence data there tomorrow, Tuesday. We also have the Bank of Canada, their Governor Macklem will be speaking as well. But when we get into Wednesday and Thursday, what a lot of people are going to be interested in is that we have the American CPI data that'll be coming out at, let's say, 1:30 London time, or the relevant time, sort of 8:30 EST, Europe Eastern Standard Time, and lots of traders will be interested to see that, to see whether that inflation journey, is continuing in terms of it having peaked and decelerating. And then on Thursday we have the American PPI, the PPI data coming out, but I think more people will be perhaps interested in the European Central Bank. They have their interest rate decision on Thursday, and most people are expecting a cut in the European rate this week, and so they'll be interested to see, not only if that happens, but also the sort of press conference after it in terms of their understanding and explanation. And then we finished the kind of the week on Friday the 13th, with a little bit of the Michigan consumer sentiment. So it is not as busy a week as last week, but certainly there is interesting data coming out, certainly in the UK, certainly with CPI and the ECB. So as I said, it's important to understand when that data is coming out and understand, the impact that it may well have, so that you're in a position to manage risk accordingly. We've looked at news. Let's look at our main educational piece, as always. And today, as I said, we're talking about how to trade using trend lines. And we already had a couple of individuals here who, kindly gave us their insight into whether they use it to trade or whether they use it as an analysis tool. Be interesting to know what has been your own experience. Maybe you're at the start of your journey and you're just here to learn, and that's absolutely fine. That's what these sessions are for, to help raise everybody's educational level. But I appreciate other people really particularly like to use trading. I trade using trend lines. One of my very best sort of trading buddies, who I trade alongside with, the trend lines make up the vast majority, the big part of his own trading plan. So they are popular, they are ubiquitous, but everybody should understand how to effectively draw them and utilize them in their own trading. And as the slide says there, they're a very useful visual tool for identifying a trend as part of a trader's analysis of markets. And they can also potentially be part of a trading method when you have the right plan, which basically involves using them in the correct fashion. And so the question becomes, how can we use them in our everyday trading in a clear and easy way? And so that's what we're going to do for our session today. We'll discuss how traders can use the trend lines and how you could utilize them in their trading decisions. So hopefully, if you are new to the trading journey, then this should help give you some insight into what they are and how you can actually use them. Let us talk about, how do we use trend lines? Well, what are they? Trend lines are a simple, basic technical analysis tool, and they can be used to help define and also project possible price trends in all markets. And that's probably a useful point to sort of consider, is that trend lines will work across all time frames and all instruments, but what you will find is that there are certain environments and certain time frames where they can be enormously useful. what I find is that when I work with traders over the years, is that there's a lot of myths and there's a lot of inaccurate information about trend lines and about how people should use them. And so it is important to learn how to use them effectively, and that's what we want to focus on today. Okay, what are they? How could you use them effectively in a way to improve your own particular trading? When it comes to what are trend lines and how do we use them, the old trading adage was always that the trend is your friend until the end when it bends. Okay, what trend lines can do is that they can help us define the trend, and they can also help give us confidence in the trend. They can give us confirmation and also confidence that the trend we are watching is valid and is something that we can engage with. But it can also help us identify the end of the trend. But to be able to do that, you need to be able to identify them and you need to draw them correctly. And I've tried to use a whole series of different examples from different instruments on different timeframes to show that, as I said, they can be used across all timeframes and all instruments, but it's about using them effectively. So even in this particular one here, this is a 4-hour chart on palladium, where we can see that the trend has been in an uptrend. Okay, but also you can probably see that we have the red 50 period moving average and the blue 20, but also we have this kind of pink, here we go, pink trend line there that was supporting us, okay, in terms of just confirming we were in uptrend until we saw it break at the end, and we'll look at that in particular in a few slides time. So, as I said, I'll try and show all sorts of different examples across all sorts of different timeframes and instruments, just to help give new traders an insight into what they are, how they are, and where you can use them, and where and why you should use them, and also on the occasion when you probably shouldn't use them, but more of that later. Okay, so first things first, step one, you have to identify if there is a trend. Okay, trend lines, including the name, it's a line that supports a trend. So we have to identify if there is a trend. And the reality is that most private traders are going to be using technical analysis as their main analysis and execution tool, and if not the main one, as part of their overall method. And that means there are different ways that you can identify if there is a trend. So you can use things like moving averages. So I always talk about, I have a blue 20, a red 50, and a green 200, and they can be useful, okay, in terms of understanding if there is a trend. You can also use, price action itself to confirm it. You can also use just simple Dow theory, higher highs, higher lows, okay, and lower highs, lower lows in a downtrend. And you will also see that I will use something as well to help us, is a thing called a fractal. You might be able to see it on these particular charts. It's the might be able to see there's kind of little triangles above and below the price action. A fractal is just simple. It's just a five candle pattern. So here we go. I'm just drawing it in here quickly, just because I appreciate there is new traders. An up fractal is where the high of this candle is higher than the two before and the two after. So you've got a kind of an up fractal, and a down fractal here is where we have the low of the candle is lower than the two candles before it and is lower than the two candles after it. But you have to remember that this is only confirmed when the fifth candle completes. All right, but once that's done, you have that as a fractal, and so hence why you can see on my charts, all right, how you can do that, how they will be drawn on there, and on both the ActivTrades platforms in terms of MetaTrader 4, MetaTrader 5, TradingView. Pretty much most platforms these days come with fractals. Just for new traders, they can utilize it to help them identify a trend. So of course, when you're seeing fractals, okay, making higher highs, and when you're seeing down fractals making higher lows as well, that all of that is helping you just to confirm that there is a trend in place, right? So I appreciate some people can use lots of different ways to identify a trend, but those of you who join me every week, you hear me always say that a good trend leaps off the chart at you. If you are struggling to identify if it's a trend, if you're not really sure, the likelihood is that it probably isn't. Good trends leap off the chart at you. The challenge we have is that markets really only tend to trend 20 to 30% of the time. The other 60+% of the time, they could be either range bound, consolidating, they might be in a transitionary period, etc. So it becomes, if we want to use trend lines, it becomes important to understand the context of the market environment, okay, identifying if there is a particular trend in place. So, we want to identify that there is a trend, firstly, but then step two is, well, identify, is there a suitable trend line that can support us? And this is the important thing. This is sometimes something I see completely new traders get wrong, or they fail to understand. In an uptrend, okay, my price is going up. A trend line is drawn beneath, is beneath price action because it is support, all right? It's drawn beneath price action as support. And in a downtrend, a trend line is drawn above price action where it acts as resistance, okay? And just a little, interesting point to remember is that, trend lines are ultimately, they are become support and resistance levels that are in the vertical rather than horizontal support and resistance levels. So let's just basically use the old drawing tools here if we can. Okay, so what I'm going to just try and draw here is that what we are looking for is identifying that, remember, in an uptrend, a trend line is drawn beneath price action as support, okay? So, we have, in many ways, we have a primary trend line. Now, I'm going to, excuse me, because it doesn't have I'm just doing that free by hand. I am, as I say every week, I'm a better trader than I am an artist, but you're getting the idea, okay, that it is supporting it. We can also even draw tighter trend lines, okay, as you develop, and this is something that fractals can help you. But as I said, the important thing is that when price is in an uptrend, is that you draw your trend line beneath price action because it becomes a support level. All right, that's the thing. So when we're in an uptrend, you draw it beneath it. When we're in a downtrend, you draw it above it. Okay, and that's what it is. And always to remember that they are just vertical support and resistance levels. All right, and that's the important thing we need to take on board and understand as a new trader. So what I have here is some additional rules for trend lines, all right? And these come from basically having been engaged with for trading for many years, but also watched many traders and seen many people's charts all over the internet, etc. And some people make some very obvious mistakes when it comes to basically drawing and then employing trend lines. As I said on the previous session, on the previous slide, sorry, there has to be an obvious trend in place. Also, excuse me, and this is something people forget, there should be at least 3 touches for it to be a legitimate trend line, okay? And, as many as possible is best, but it has to be at least 3. What it should also be is that it should appear as a natural trend line. And really what we're talking about there is do not force it. And you'll find, with everything in trading is that you don't want to force it. As I said earlier, if you feel like you're not sure if there's a trend in place and you're having to force it, it probably isn't there. It's kind of like there's a natural rhythm, there's a natural balance to markets. It's a bit like a golf swing, or it's like a snooker playing, or it is like a cricket bat shot or a baseball shot, or even like shooting a target, etc. You want to be relaxed and you want to be balanced and you want to be in rhythm. Whenever you force things, if you try and force a golf shot, if you try and force a football shot, or you try and force a snooker or a pool shot, it rarely works, okay, because you're forcing it, you're trying too hard. And it's the same with trends and trend lines, okay? They should appear as a natural trend lines. And if you are struggling, okay, well, as we just described on the previous slides, fractals, which are available on the ActivTrades platforms, they are there to help you if you are struggling, all right? And as a general rule, they should not cut through candlesticks, okay? But there is one exception, which we'll talk a little bit about later. So As I said, this is a chart from, this is dollar Canadian dollar on the weekly chart, and I hope you'd be able to realize that there is a very clear downtrend in place. All right, good trends leap off the chart at you, and then it becomes about sort of learning the trend. You can see there's already a couple of touches there, but also we can extend it forward. Oops, as I said, excuse my drawing. Okay, this doesn't have a trend line tool on the drawing package here, but hopefully you can get the message there. You can get the idea. Okay, good trends leap off the charts. Good trend lines. Okay, should be as natural as possible. And the reason I kind of emphasize that and going on about that is because sometimes I see new traders, they draw their trend lines in the wrong place. They can be a bit too aggressive, or they can be a bit too slack. And with horizontal support resistance levels, it's very easy for everybody to confirm that is the level, okay? Because the nature of the way you see price bounce off particular levels, particular horizontal levels. But because of a trend line, sometimes there's a bit too much subjectivity. And so what we want to do is we want to make sure that we're following simple, good, consistent guidelines, trade in, trade out, that help us make the most and be the most consistent in the way we actually look to affect trend lines. So as I said here, you can see I've drawn it there. Okay, is that basically good trend lines, very natural. Don't force it. Okay, they are there for you. It should leap off the chart at you because we're looking for it to be able to help support you. Okay, and if you force it, it's rarely likely to work in trading, as it is in life. Whenever you force things in life, they tend to boomerang back at you. And trading is the same. And part of your trading journey is about finding your natural balance, your natural rhythm in the way you interpret and engage with markets. There's different examples of this is weekly chart on pound against dollar on the cable, and as I said, hopefully you can see we've got 1 touch, 2 touch, 3 touch, 4 touch there, 5 touches. Okay, we have 5 touches there, and that's a fractal, that's a fractal, that's a fractal, that's a fractal, that's a fractal. Okay, and these are fractals here. Oh, that one is there, but they don't really touch the trend line, but in a way they are still supporting it because they don't break it, they don't pierce it, and as I said, you want at least 3 touches, okay. Fractals can help you as well, and it shouldn't, as I said, shouldn't be forced. Okay, it shouldn't be forced. It should be a natural trend line. All right, and the more touches, okay, that it is, then the better. And what it shouldn't be is sometimes here. Let me just sometimes might start, but they might sort of just draw it through the price action. If you're drawing it through the price action, there ain't a trend line there. Okay, there isn't a trend line there. You're looking for it to basically to be underneath price to support it. Okay, that's what we want. We want it to support it. Okay, until the trend changes, and that in itself is useful information. So in an uptrend, trend line is always above. All right, that's what it is. That's what we know. And as I said, you don't want to be drawing it through. I see people do that, and that isn't a trend line, ladies and gentlemen. Okay, so if we have started to draw in trend lines, okay, into our charts, then the next part becomes, well, actually, how do we use them? All right, how do we trade trend lines? How do we turn it from just a simple analysis tool of confirming a trend into a way and a means for us to engage with the markets? So I would say that there are 3 obvious ways that you can use trend lines. The first one is a bounce off the trend line. Okay, price comes up and it bounces off the trend line. Second one is a break of the trend line, and then the third one is a retest of the trend line. So 3 obvious ways. What I tend to find is that when people who like to use trend lines, they tend to focus on one of these 3 ways of using them as a way to engage with market, either a bounce, a break, or a retest. And a lot of that is down to the individual's risk parameters, okay, the individual's risk tolerance, and we'll look at that on a chart in a moment or two's time. That's what we'll take on board. But hopefully you can hopefully you can understand that there are those 3 ways, and why don't we have a little look at those 3 in a bit more detail to understand what it actually means. So First one, bounce off the trend line. Let's just draw this. Not unsurprisingly, okay, we're looking for, a trend line is established. And what we're able to do is we can trade a bounce off every retouch off the trend line. So we're looking to bounce, okay? So, what we're interested in is we can see that especially when price action candlesticks provide suitable entries and trigger bars for us. So in this particular case here, we can see that price was in it was in an uptrend, but it wasn't necessarily, it didn't start off as the prettiest one. It was kind of a bit of a grind up, but it was in a trend, but it was grinding its way up. But as we identify that that there is basically a trend line in place, well then every return to it here, okay, there it printed a bullish engulfing candle. Here it's a bullish rejection candle. Here, that is a real bullish engulfing candle there. So once you've established that there is a trend line, in place, and that you can project it forward, when you see price come back to that trend line, excuse me, and when we see price provide the price action candlestick, things like pin bars, engulfing candles, key reversals, or even morning and evening star formations, when we provide them, well then now we have a very simple trade plan to be able to sort of trade the bounce off that trend line. If you're new to trading and are not really sure, about pin bars, engulfing candles, key reversals, and star formations, then either go onto the ActivTrades website and have a look under the webinar archive, and you'll see that I've done previous sessions on those, and you can watch them and learn exactly what those particular candlesticks and trigger candles are. Equally, also, you can look at it on the ActivTrades YouTube channel, as we will see more and more of those videos are placed upon there. So be sure to follow up on that as well. So that is one way to do it, to trade a bounce off the trend line. Nice and simple, okay, nice and easy, just a very simple visual way to utilize trend lines as a way and a means for a place as a what we would call almost like a dynamic support level that basically we can look to trade off when we get a combination. All right, you often hear me talk about how we want to see a confluence of events. We want to see 2, 3, 4 things coming together at one time and place. So in this particular example, let me just clear all those drawings off. We've got a confluence of events. We are in an uptrend. There is a supportive trend line. Price has come back to the trend line. Price is printing in this case, is printing bullish price action candlesticks, okay, that support us, and that also provide us with the trigger for us to enter that particular trade. So as I said, confluence of events all in place there very, very nicely. Okay, so that was the bounce off the trend line, and now let's have a look at the break of the trend line. And not unsurprisingly, it's in many ways it's the exact opposite. Okay, in terms of it, moving from supporting a trend line to confirming that trend line has ended. Okay, that it's come to an end. So break of the trend line. So once a clear trend line has been established. Okay, you can see here's palladium here. Okay, and it was in an uptrend, quite a clear uptrend, but also we had a supportive trend line here. We wait for a break of the trend line. All right, we wait for a break of the trend line. I'm going to clear this down just a little bit more. Up here is where we had the break of the trend line. Okay, break of the trend line. That's us telling us that invariably the trend is over. So this is more of a reversal, whereas the previous trading a bounce off a trend line, you're actually just looking at trading a pullback in a trend. This is a reversal. This is an end of the trend, right? We enter on a close on the other side of the trend line, okay, in the opposite direction of the trend. So once we see here that price closes the other side of the trend line, that is when, trend line traders would be going short and having their stops above the recent high. Okay, that's what they're looking to do. But, just a couple of points to note there, I'm just sharing experience with it. This style of trading, the break of the trend line, it is the highest risk and the highest reward. So you need to understand within yourself, where do you sit in terms of risk tolerance? Where do you sit on the risk spectrum? Because some people are very accepting of risk, other people are very apprehensive about risk. You need to understand where you sit on that, okay? And it also needs a good stop loss. So I'm going to draw clear this down. In this particular case, my view would be that the natural stop loss is above these recent highs, okay? So that if price does zigzag a bit, you can stay in that particular trade. So it is important to know a break on a close on the other side of the trend line, and also where there is a natural place for your stop loss to go. And as I said, this can provide you the highest reward, but there is no reward without risk, and you need to understand that and manage risk accordingly. Okay. So it'd be interesting to know of the people here who currently do use trend lines in their own trading. Do you so far tend to use it as either a break of a trend line as your entry, or do you use it as a bounce off a trend line as a way and a means to continue with the existing trend? That would be interesting to know, because as I said, all people have different ways. There's no right or wrong. It's about understanding which is the way that works best for you. That's the really crucial element. Okay, so hopefully you can see that's how that particularly works and stuff. So Benjamin says, I'm a trend trader, so I look for the bounce. Right, so that's great. Okay, he's a trend trader looking for the bounce. So you'd hopefully understand what we just talked about there, Benjamin. Confluence of events. Nice trend in place, supporting trend line. Price comes back to it. Price prints a price action candlestick, allows us to bounce off there to continue with the trend. And interestingly, Martin says, I look for breaks in trend lines when trading. That's excellent. He's the other side. Okay, and that's great. That's great to have that, because well, the reality is, that's what makes a market. Some people will buy, some people will sell. All right, that is what makes a market. That is what makes engaging with markets so fascinating as an endeavor. And it is important that traders understand, what can in this particular case, what side of the fence are they on? Do they like to trade a bounce off the trend line? Do they like to trade a break off the trend line? They are both valid, so long as you have a nice, simple process that you can follow with that. So that's excellent. Thank you, Benjamin. Thank you, Martin. Appreciate that. So that was the first two that I promised you. The third one is what we call the retest of the trend line. Okay, a retest of the trend line. Okay, what does that mean? Well, it's another version almost of the break of the trend line style of trading. So once again, as always, we establish with a clear trend, and a clear trend line has been established. We wait for a break of the trend line. Okay, However, now we wait for a retest of that trend line. Whereas when we were trading just a simple break, once price had closed the other side of the trend line, you'd be onto it, okay, and your trade would be on. Now we wait for a retest of the trend line, and you'll quite often hear traders talk about it as kissing the trend line goodbye. Okay, kissing the trend line goodbye, and then what we're looking to do is to enter in the direction of the new trend. So in this particular case, this is dollar yen 4-hour chart. It's been in a nice downtrend. You can see, the kind of pink line there. Okay, quite a clear sort of trend line there. And then what happens here? Just draw your attention. We have a break of the trend line. Okay, we have a break of the trend line. This is the 4-hour chart. But the next candle here. And if you look at it, the next candle here opens, but then what actually happens is it comes down and it kisses the trend line before it basically bounces off it. It bounces off it, and it bounces off so strongly that it goes past its open and closes higher. Price has broken the trend line on the first candle, and then on the second candle, all right, it has come back, it has retested the trend line, it has kissed the trend line goodbye before it has taken off in its new direction. Okay, hopefully you can see that. And in fact, actually, just with my eyes, just very quickly, you can see there was a supporting bullish trend line there. Okay, with a few touches in place. But what we're focused on is that. Okay, breaks the trend line, comes back, retests it, kisses the trend line goodbye before it goes. So as always, there's points to know. I always try to share the try and share the kind of honest, open, transparent way with all sort of trading methods, because there is no perfection. It is about what works best for you. What can you consistently work with day in, day out in your trading business? And so the points to note here are, you generally tend to have a better hit rate when you wait for a retest. You tend to have a better hit rate. However, sometimes price will not retest. Price will not. Sometimes price will not come back. Okay. Sometimes it just invariably. Sometimes, let me just clear these drawings. Sometimes, having been in a nice trend, okay, sometimes price will just break and it'll be gone. And if you're waiting for the retest, well, you will miss it because there isn't one. There isn't one for you to sort of to get on board. And so that is, you have to take that on board. Okay. So a break of the trend line has the highest, risk, but also the highest reward. A retest of the trend line has it's a little bit less risky, but then on the flip side, there is the opportunity that you might miss out on reward. And so, as I was saying, you have to just understand where you sit on the risk spectrum. Everybody has their place, and it's important for you to know your place on that risk spectrum. And the reality, I can say after decades of trading, is that the only way you learn that is by actually taking the trades, keeping good records and debriefing them, and starting to look for trends in your own trading. That's the way. So Benjamin talks about how would you protect yourself against fake outs. So good question, Benjamin, especially if if Benjamin, you're looking for trend. Okay, you're looking for balances. That's your general kind of way to look and operate with that. The interesting thing is with what we see here is, let me just do it on this side. Let me just clear these drawings down. Is one of the opportunities you might have is that basically price could break through it and then basically sort of fall away and actually not kiss the trend line, but actually just continue. In which case, this is why you would never ever, if you're trading the break of the trend line, that's why you always have your stop beneath the recent low. That's one of the reasons, because price could fake in and then fake out. That can happen to traders. That happens to everybody. It doesn't mean the trading method doesn't work. It doesn't mean you're a terrible trader. That happens to everyone. That is just part of the nature of engaging in such a fluid, dynamic market. But the reason why you look at avoiding fake outs is that you ensure that your trend line is in the right place. And as I said, this is the thing. Trend lines can be more subjective because people interpret them differently, as opposed to just let's just say a horizontal support and resistance level, which might be also be a big round number like, I don't know, $2,500 for gold or $30 for silver. That is why you see lots of subjective trend lines, because people interpret how to draw them. And that's why I say, you have to ensure that you have a good trend in place. B, it should have at least 3 touches, and the more touches, the better. And also, the trend line shouldn't go through candlesticks. Okay, it shouldn't go through the candlesticks. Okay, they should respect the candlesticks should respect the trend line, because if they don't, well, then actually it's already changed. All right, it's already changed. But in terms of fake outs, they happen to everybody. That's why we make sure that we have a stop loss in place. That's why we make sure that we only risk a small portion of our account on a trade. Those are just really good, solid risk management principles that we all look to embody. And certainly if you've been here for my previous sessions, you'll know that, I go on about managing risk first and foremost. So I hope that helps with that. Okay, so here's your takeaway from today's session. So what I want you to do, and if you're joining us for the first time, I always try and give you a little bit of homework, because I realize that going away and practicing this, that is what embeds the knowledge. Okay, we can look at slides, we can look at charts, but it's actually you going away and doing a little bit of work. That is what embeds the learning from today. That's what helps you really understand the concept. That's what actually helps you work into whether it is a valid way of operating for you. Okay, and everybody's different. But go away from today's session takeaways. All right. go away and have a little look at your favorite trading instruments, all right, and your favorite trading time frame. All of you may have them, okay. You may know it. They might be different. That's fine. Doesn't matter whether you trade gold or whether you're trading copper or euro dollar or the DAX, okay, or silver, etc. Look for periods when the instrument was trending. All right, just look for that. Were you able to identify good trend lines? Right, were you able to identify good trend lines? And just look at those trend lines in a little bit more depth. Were there really good bounce opportunities? Were there opportunities as that trend line matured where price came back, bounced off the trend line and gave you an opportunity to actually to enter? It was an opportunity for you to, let's say, buy the dip in a trend line. Or alternatively, were there good break opportunities when the trend actually ended? Did it break the trend line nicely, cleanly, and provide you with an opportunity to give you almost like early warning that the trend was about to move in the opposite direction? Or finally, did it provide opportunities where price broke and then came back and retested the trend line before it took off in the new direction? As I said, break and retest trades, they tend to have the higher win rate, but what the problem is that sometimes when the trend breaks, it does not come back and retest. It just the trend cracks and price just drops, or price rises, and you have to recognize that's the sort of the trade-off. As I said, there's no perfection. It is about what can I work with, what really works best for me. So as always, there's a bit of homework, bit of takeaway. Go away and have a look at them, because that, as I said, that's what actually helps you become a better trader. Okay, so in conclusion, before we look at the charts, the Money Market Matters webinar is here to support you in 2024, every Monday, 2 o'clock London time. Some news, education, active trades tools, and also the markets. I've said this all year. It's going to be an interesting year in markets. I stand by that. I think the last few months of the year are going to be very interesting. And I hope that you will join us to enjoy that journey. So what we've talked about is, trend lines are a useful visual tool to aid a trader with their analysis of markets. They also provide trading setups as well. It's clear that they only work in a trending market. Trend lines provide support in bullish moves. Remember, you draw it underneath the price, okay, in a bullish trend line, and they provide resistance in a bearish move when price is in a downtrend. A trend line should have at least 3 touches, and preferably many more, 5 plus, but it has to have at least 3. And what we're looking for is a confluence of events. You can learn to trade either a bounce off the trend line, or a break of the trend line, or a break and retest of the trend line. Those are 3 different ways that, once you've drawn in and identified your trend lines, that you can utilize them as a trading means and as a trading tool. So why don't we switch across and have a little look at the live markets? As always, we'll see if there are actually any trends playing up at the moment. Okay, the last few days have been the last week has been quite volatile and stuff, but we will see if there is any there that kind of leap off the chart as we just look at how the markets have opened up already today. So before we do that, just a reminder, next week's session, 16th September, Money Market Matters, we're going to be talking about trading the FTR pattern, the fail to return. So I'll be sharing insight and experience on how to do that. If you can either sign up for that on the ActivTrades website, or you can see there's the QR code there. You can take a screenshot of that and utilize that to register, and I hope you'll join us for that. And as always, okay, I said that the webinars are available on the archive, but also you can follow ActivTrades on YouTube. Okay, follow us on YouTube to be able to access all the Money Market Matters webinars. Okay, they're normally placed up a day or 2 later on the ActivTrades YouTube channel as well. So finally, I'll switch across to the charts. If you have any questions or comments or thoughts or feedback, well, then, of course, you can contact us. You've got the email there, englishdesk@activetrades.com. If you've got some feedback, or if there's topics that you would like to see me cover in future sessions, okay, for the remainder of the year. This is a chance to basically put them in either here in the chat box or send it to englishdesk@activetrades.com. We want to make these sessions as beneficial and valuable for you as possible. So this is a way for us to be able to add that too. So you're very welcome to do that. So just bear with me a moment. Just bear with me a moment, and I'm going to switch across to the charting platforms. So Martin says ABC patterns and X-day moving averages. Okay, yep, I'll take that on board. All right, we can cover that in. It'll probably be a month or two as it filters into the routine, but we'll be happy to put that in, Martin, for you. Okay, we want these sessions to be beneficial and useful for you. So I'm happy to do that. Okay, so I'm hoping that you can now see my chart. Okay, we've got the ActivTrades platform up here, and hopefully you can hear my voice as well. Still, just making sure the technology is working. We'll look at the American indices in a moment, but we're up here. We've opened up here. I have a profile for the US dollar. I like to trade a lot of FX pairs. And I always start with the dollar, and I always have it. This is the dollar index. I have Aussie dollar here, Euro dollar, pound dollar, dollar Swiss franc, Kiwi dollar, dollar Canadian, and dollar Japanese yen. So I'm always looking for that. Okay, just and it's what I talk about to new traders in the FX market. Just understanding the dollar and the dollar index. That can be a good starting point. So we'll just go through a little bit of the analysis here. We'll see if there's any particular trends that show up. Martin, yeah, this is MetaTrader 4. You have access to MetaTrader 4, MetaTrader 5. There's also ActivTrader and also the opportunity to use TradingView as well. So kind of mix it up between which platforms and tools are available, but the in terms of the concepts, like the trading concepts, the trading concepts work regardless of whatever platform we talk about. So as always, I like to start with the dollar index. Okay, just to look at it now. Clearly, this is the monthly chart. Clearly, for those of you who've been here with us, from 2021 up through till the end of 2022, we were in a very clear uptrend there, weren't we? It was a very clear long-term uptrend, okay, and there will have been trend lines to work in from that. But of course, what I am interested in is that if I look at that on a monthly chart at the moment, for the last 2 years, well, getting towards 18 months, 2 years, 2023, 24, we have mostly been in a range between 100 at the bottom and then about 106 at the top. Okay, hopefully you can see that is after that fabulous trend, we've been mostly in that. But that doesn't mean we can't. If we look at it in other time frames, this is the weekly chart, and the dollar index having kind of, let me just zoom out a little bit, having kind of rallied up to the highs of 2023. I haven't had that great trend line. There was a real trend line there. Okay, if we look at what we saw is having rallied up to the highs of 2023, we ended that, and the last couple of months we have been basically on a downward trend there, haven't we? And if I look at the sort of the daily chart here, we're just looking at that has been in a throughout July and August, we were in a very clear downtrend. The thing is, what I would be saying here is that it didn't really sort of demonstrate on the sort of the weekly or the daily charts that a supporting trend line. The reason being is that actually the trend sort of is accelerating. Okay, the trend was accelerating. You can see how it was pulling away from the moving averages. That's sort of giving an indication that the price is accelerating away. Yeah, we had a nice bearish flag pattern. All right, but in terms of a supporting trend on that time frame, there wasn't really one there that we could sort of utilize. But what we are looking here is, I spoke about this last week. We were in a very strong downtrend. Towards the end of August, we had a little bit of a bounce from it, and that was at bouncing off around about the 100.6 level, and then we came back to retest it, and then this was Friday's NFP data come back and test, and now we've created like a double bottom reversal pattern there. And when I start to go down, that's when I start to sort of look and get a little bit of interested in it. So in particular, kind of. Oops, I'm just gonna make my trend lines, these trend lines, a little bit more evident. So what we might have had is bank is that the kind of a longer term trend line there. Let me just that basically had touches here before it was broken here, and hopefully maybe you can just see this was kind of having broken it there, we kind of broke out it, and then we came back, and this was a very, I would call this a very, very scruffy kissing the trend line. Having broken it, it kind of came back to it, and then we ran into, and then invariably this was the non-farm payrolls here. This is non-farm payrolls before we bounced off it there. But it's probably a little bit more kind of understanding is once you have it into the trend lines, well, then you will find there are also ways that you can actually that you might well have more aggressive trend lines. As I was saying, when you're in a nice trend, you want price to be, here we go, let's just draw it. In an ideal world, we want kind of trends to be at a sort of nice, almost like kind of 45-degree angle, all right, or what would be like about 135-degree angle downtrend. That's what we want, but what you want and what you get can sometimes be a bit different. But if you have a primary trend line, going a little bit, probably a bit more advanced, you can have a primary trend line, then you can also have secondary trend lines as the price accelerates, okay, as the price accelerates, and you can see the price accelerated into that double bottom there, which it came back up, and then it formed the double bottom that we've just looked at on the daily chart that'll go up, and now I'll be looking to see, for me, if it breaks this area here, and then comes back and tests, and then I'll be looking for, are we switching to a bullish trend? And in which case, then you'd be looking for a supportive trend line on that and stuff. So I'm just kind of doing a little bit of analysis. We just wanted to try and fit in what we've spoken about for the last hour. So yeah, that downward trend line is getting broken, and it's come back and retested it, and now we're going to see, is it going to follow? Will it follow through on that? Which means a bit of bullish strength, and that bit of bullish strength is what invariably means that we're seeing weakness elsewhere. So if we look at basically dollar, okay, dollar had kind of an interesting. Dollar had Aussie dollar has had a rather eventful sort of journey there with the US dollar, but US dollars are saying was very, very weak during especially during August, but that's now changing. Okay, that's now changing indeed and stuff, and it's kind of curious about how starting to sort of draw and project forward trend lines, and then seeing actually how price will sometimes pivot around it. They're kind of on the lower time frames, as the trend is starting to pick its new direction. Certainly, what we're seeing is in September, that has been Aussie weakness, dollar strength, which is it's really reflecting what we're starting to see here, that the dollar weakness is now starting to turn. Okay, we're starting to turn to dollar, into particular dollar strength. Probably one of the biggest pictures here has been off oomph. Okay, so this is the weekly chart on the dollar yen. We've had 1 touch, 2 touch, 3 touch, and then here we go. We broke it here, okay, in the dollar yen when we had a collapse, and then we came back up. And what did we do here? We came back up. We kissed this trend line, okay? This long trend line, kissed it again, and then we've dropped our way from it, okay? And if I go down to the daily chart, just a second. Yeah, that's where we came out to on the daily chart. That was it from there. We sliced through it, then came back to it, and then we've kind of worked our way down. And a lot of that is representative of the Japanese yen strength that we have seen, right? We've seen coming into the market over the last month, okay, over the last 5-6 weeks. With that dollar yen sort of falling away, that's just a reflection of the kind of dollar yen strength that we're working with. So, but here we go on that weekly chart on that dollar yen there. That trend is now broken. It's come back to retested, and now we'll be working our way down to that low, and we'll see whether that continues down to the 140 level and stuff. I'm just looking at that on that. Yeah, the sort of saying is that sometimes the price in this case is dropping so far, but then actually it's difficult to draw a really supporting downward trend here. What I'd be looking at is I'll be looking at it, but we've only got, I wouldn't be sort of saying that's a trend line, but I'll be looking at this being a case of if price comes up here, I'll be looking at that. If it bounces off there, well, then now we've got 1, 2, 3, and it has really become a very clear trend line on that. Okay, here price was just falling so fast that there was no real trend line on that daily chart. Certainly, it was a very clear downtrend, but not a supporting trend line because price was just rolling away so fast. So. So it's very clearly how quick that the situation is changing. What I want to be able to see is we're starting to see a bit of dollar strength. Okay, a bit of dollar strength come back into that particular market, and we want to be able to see how can we work with that. What we had here, I'm just looking to see. You can see that here. This is dollar against Swiss franc. It's probably just mine is a little bit. I'm just being a bit aggressive there. Okay, is that having a supportive trend line here? This was dollar strength. This was Swiss franc weakness all at the start of the year until it breaks. It also breaks with a key reversal off the 200 period moving average. It breaks it. It comes back up. It tests it, and then price starts to drop its way down there. If I look at it there, that's a trend line there. Okay, we've got 1 touch, 2 touch, 3 touch, 4 touch, but this is kind of, as I was saying, price is just accelerating away, and that's just an indication of that dollar weakness that we've seen, that dollar weakness and Swiss franc strength. As we go into a risk-off environment, Swiss franc strength, Japanese yen strength, and dollar weakness was the kind of play through the summer. But now we're going to start to see is that going to change? Are we going to start to see a bit of dollar strength over the next couple of days, or at least the next couple of weeks, as we run into that FOMC array announcement on the 18th of September. Okay, ladies and gentlemen, unfortunately, we have to draw it to a close there. Okay, overrun there. Time flies as you're having fun and all that. I hope that has given some of you just an insight into what trend lines are, how you can utilize them, and most importantly, the 3 different ways you can trade using trend lines. I hope that's just giving you an insight that you can go away and start to look at and test with your own trading. As always, I hope you have a fabulous trading week. I hope you'll join us next Monday for Monday Market Masters, and we'll talk about the fail to return setup. Remember, it's going to be a busy week. It's going to be an eventful week, so make sure that you are, make sure that you're well prepared and that you're always managing risk. And I will speak to you soon. Take care, everybody. Cheers.